Howdy, Jacob here. Today we're looking at Lam Research Corporation in the semiconductor and semiconductor equipment industry. Enterprise value and market cap both essentially at 124 and 125 billion dollars. Founded in 1980. That's a huge company. We can see growth, fantastic, 4.6 billion to 17.4 billion in 9 years. Profit margin up a percent, operating margin over double what it used to be 9 years ago. Return on invested capital is in the 30% range. Unbelievable there. On the income statement, we see that shares are going down quite a bit. 30 million shares bought back in the last 10 years. So not only is net income is growing faster in revenue, which is great, but they're buying back shares, so their earnings per share is growing up like wildfire. Cash and equivalent of 5.4 billion roughly in short-term and long-term debt of under 5 billion. So you have more cash on hand than debt. So balance sheet perspective checks out. Beautiful balance sheet, very safe. And then cash flow perspective, I would consider this a cash cow. So their cash from operations is upwards of $5 billion with capital expenditures, 10% of that. So they are just producing cash like absolute crazy, and they're using that cash to a little bit reinvest with themselves, a little bit of acquisitions, a lot of share repurchases, and then maybe 25%, 25% roughly going towards paying a dividend. Okay. So let's start making some assumptions here. Numbers look fantastic, but you have to understand everything is the price you pay for it, and it's the price of a business is based on earnings and free cash flow. So let's start making some assumptions. I think on the revenue side, I wouldn't be surprised with 20% revenue, 20 on the P, price to free cash flow for that type of business, saying at the end of 7 years, they'll probably have a good amount of growth ahead of them. How much? Not entirely sure, but definitely a premium above the market, I think. Margins have been pretty close, increasing a little bit, so I'll probably go on the slightly higher side of these. Okay, let's do 25, 24. Let's say they buy back 2% of shares, because 2% of shares would be paying for about 124, let's say 1.3, 2.6. $2.6 billion. That's a lot. So if they do that, that's a lot of their free cash flow going towards repurchasing shares, but they've historically done that. And my perspective is you balance out with what they've done historically with what you want them to do. And so would I want them to be buying back expensive shares? Absolutely not. But from history, it looks like they buy back a lot of shares, and the more money they make, the more shares they repurchase. As for the dividend, they've been increasing it quite a bit. I think I would, not be surprised if they could increase that 12% a year for the next 7 years, and we get to a price that's just slightly overpriced at this point in time, needing to fall 47% before you get the return I'm looking for. But again, everyone's different. They're going to have different assumptions. I hope you have your own assumptions. If it makes sense for you, then absolutely. But for me, I try to be more conservative with my assumptions, and I try to get a return on investment that's well in excess of the market, likely at the 15% return I'm looking for. Not saying I even buy it at these prices, but before I do more research to come up with assumptions that are more appropriate given looking through their annual reports, quarterly reports. And right now, the numbers, again, look absolutely fantastic. But it's not just about buying in a great business. It's about buying a great business at the right price. And I just don't think this is the right price for me. But again, everyone's investment purposes are different. So if you're just looking for, 10%, if you're just looking for high dividend growth, the dividend payout is very low, and I think they still have a great growth rate ahead of them. So I do think if you're looking for dividend growth, you will see that here. If you're looking for less return, I think you could get that here. But that's just not where I am at in my investment journey. And so please do your own research. Hopefully this is reviewed in conjunction with your own analysis. And I hope you enjoy the video and have a fantastic rest of your day. Thank you.